Welcome to day 6. Today we're pulling back the curtain on the people who actually move the market makers. These are the banks, brokers, and institutions that connect buyers and sellers, set the spreads, and decide how price moves. The market makers are the middlemen of Forex. They connect retail traders to each other, they connect traders to banks and institutions, and sometimes they even take the opposite side of your trade. Their goal is to keep the market liquid, active, and profitable for them. Once you understand how they think and how they work, you'll stop reacting and start anticipating. Here's how the game plays out. You are looking for a clean setup. They are looking for emotional reactions. You are trying to ride a trend. They are creating it, faking it, and then reversing it. They use spikes, stalls, and stop hunts to get you in at the wrong time, and then they take the other side of your trade. Now, once your order is filled, you're in their game, and the more emotional you are, the more likely you are to lose that round. Most traders get stopped out, not because they were wrong, but because they didn't understand the game that they were playing. See, market makers move prices on purpose to trigger stops, to grab liquidity, and to protect their own positions. So when you can spot these moves, you can trade with them instead of being used as liquidity for their own trades. So we're not talking about a few shadowy figures here in the back room somewhere when we're talking about market makers. We're talking Goldman Sachs, the heavyweights in currency and commodities trading. We're talking also about HSBC, who has a massive foreign exchange presence in Asia and Europe, and then Barclays, who's another top-tier liquidity provider. Then we also have the big brokerages like IG Group, Interactive Brokers, and Saxo Bank. These guys move billions daily, and our goal is just to ride their wave without getting pulled under. The puppet masters of price. So market makers love sudden news spikes, big candles, emotional traders. Why? Because fear and FOMO create liquidity. They'll stall price to make you second guess. They'll reverse the market the second you're sure that it's going your way. It's not personal, it's business. So how do we trade smarter? Well, you can't beat them, but you can understand them. You can learn their patterns. You can watch how price behaves around news, key levels, and high volume zones. They can only trick traders who are acting emotionally. You're here to play chess, not checkers. So today we're going to have an exercise in spotting manipulation. So head to TradingView and I'll see you in the charts.